If you have been following the property market for a while, you'll notice something interesting. Every few years, people will say the same thing. Property is too expensive now. I've heard this in 2010, 2013, 2018, 2020, and again today. So instead of giving opinions, today I want to walk you through how I personally look at the market using data, buyers' psychology, and also the property life cycle, so you can decide for yourself. Most people decide whether property is expensive by comparing backwards. We compare today's price with what someone paid 5 or 10 years ago. It's very common, even myself sometimes we will look back, but when you bought back then, you were also comparing backwards. So like for example, in 2020, people thought 2,000 per square feet in RCR, rest of central region, was expensive. Today, right, people wish they could still buy at that price. So the question is not whether today is expensive. The question is, what will people compare today's price with in the future? And for the current price bands, right, what does this actually means? As of now, right, average pricing looks roughly like this in this chart. So CCR between 3,000 to 3,005, RCR between 2,005 to 3,002 per square feet, OCR between 1,009 to 2,003, and ECs have already reached the 1,009, almost 2,000 per square feet mark. So when you see these numbers, right, many people instinctively feel it's expensive. But I always ask, right, is compared to what? Compared to 2018 or compared to what's coming next? So instead of comparing, right, with the past, right, sometimes we have to think forward. We need to actually compare with future launches. So instead of comparing like today's prices with the past, like mentioned, probably we can compare today with what's coming next. Because future supply tells us a lot about where the market is heading. So let's take two very real, very recent examples. Newton GLS, the land bid itself. At Newton, right, the latest land bid came in at about 1,820 per square feet per plot ratio. So now this number is very important. Why I say that? Because this is before any building goes up. So it hasn't include construction costs, haven't include show flat costs, marketing, and also financing costs, and definitely before the developer's profit margin. So when people say, wow, $3,000 per square feet sounds crazy, sometimes we got to ask, have you looked at the land price? Like Bayshore is the next example. Bayshore GLS, OCR is no longer cheap land like they mentioned. Now let's look at Bayshore. Like Bayshore GRS land bid actually already hit 1,388 per square feet per plot ratio, and this is traditionally considered an OCR or city fringe area. So meaning this is not prime orchard, it's not Marina Bay, yet the land is already priced at this level. So again, this is just the land itself. So what developers actually factor in? When developers price a project, right, they don't just look at the land itself. They factor in everything: construction costs, which has gone up significantly over the years, labor costs, material costs, consultant fees, show flat construction, marketing and the sales commissions, okay, financing, and also the holding costs. And lastly, like a reasonable profit margin. And no developer, right, launches a project hoping to break even. So what does this actually mean for the launch prices? So once you add all this up, right, a land bid at 1,820 per square feet per plot ratio in Newton does not translate to a 2,200 per square feet launch lah. I mean, realistically, it points towards launch prices closer to or even higher than 3,000 per square feet. So the same for Bayshore, with land already at 1,388 per square feet per plot ratio after cost and margins, right? A 3,000 per square feet launch price is not unrealistic. So let's now come back to today, okay? If today, right, you are looking at something below 2,000 per square feet, and future launches in similar or even better locations are already trending towards 3,000 per square feet, then the question isn't like, is today expensive? The question becomes like, what are future buyers going to compare today's prices with? Okay, so this doesn't mean like prices will shoot up overnight. Yeah, I mean, for us agents, even though we have the sets and figures, we don't have a crystal ball. The markets actually move in cycles. there will be like some pauses, some corrections, there will be some points whereby you go up and down. But what land prices tell us is this, that the replacement cost of housing, right, is going up. And that puts a natural support under prices over the long term. So the natural transition to the next section, right, is this is why I don't just look at whether prices go up or go down. We actually look at the floor itself, like the price range where it's starting from now, and how buyers and sellers will actually go into the market based on all these sentiments. So next year, right, if you want a decent RCR project near MRT, prices are closer to 3,000 to 3,500 per square feet. And in OCR, even the so-called cheaper projects are pushing at 2,300 to 2,400 per square feet already. So if today, right, you can still find something around 1,900 to 2,300 per square feet, the question becomes, is there like upside pressure? Like, okay, it's not guaranteed, like I mentioned, we cannot dictate how much profits you are going to earn in future, but you can see how this will lead up to the per square feet range when it comes to future launches and the current market moving forward. Now let's talk about demand and supply, because this is where some people may get confused. For the past 5 years, right, the data has been very consistent. So for every one new launch unit sold, right, there are about 2 resale transactions. So last year alone, right, about 14,000 resale transactions versus roughly about 10 to 11,000 new launches. So that tells us something very important. Like, buyers are not disappearing, they are just choosing very differently. So today, right, buyers' behavior is shaped by one key thing: immediacy. What we mean is, like, when you buy something online, right, do you choose the item that takes the longest to arrive? Like, most people will want something fast, like something visible and usable right or immediately at the point of time. And property is of no different. Resale gives people certainty. They can see it, they can touch it, they can view it, they can move in or rent it out immediately. And that's why resale demand stays strong during uncertain periods. Then on the new launch side, right, developers face their own constraints. They need to sell at a certain percentage for units to move construction financing forward. And that's why early launch prices often looks more attractive. Like, once the supply actually tightens, right, pricing power actually shifts from the developer side. So it actually based on the launch pricing, then from there you will go over the recovery stage and the takeoff phase. There are also like post-launches that still adds values to consumers, which just need to compare with the surrounding demand, the prices, and come to a conclusion if the entry price makes sense. This is where psychology comes in. If you are a seller with no urgency, you won't sell cheap. If you are a buyer who needs a home, you will feel the pressure and you want to commit ASAP. And that imbalance, right, is what supports prices. So just like tech launches, like people chase what's limited, like the latest like iPhone 17 or the latest limited edition collection in the market. Not because alternatives don't exist, but because supply is controlled. So the real question isn't whether prices will go up or go down. It's what position are you taking right now? Are you currently a buyer who is looking to buy into the market? Or you are thinking of letting go of your unit as a seller? Or simply someone waiting on the sidelines? Each position has consequences. If after reviewing the data, you still prefer resale, that's perfectly valid. Then we ask a different question and align your objectives. How much of this purchase is for own stay? And how much is for investment? Buying into the next property now, what would make you feel like this was a good decision made? And we analyze the pros and the cons of a certain project view, understanding how this intended purchase will feel like it is a good decision made. Also tells a lot if this is more of a home or an asset for the next progression. When your goals are clear, the decision comes much easier. In the next few videos, I will go into different districts. We will look at condo performance, the profitability, and why certain projects outperform others. And if there are certain condos you would like to analyze or explore further, drop them in the comments below. And most importantly, what to look out for when entering the private resale market. not to chase hype but to make confident, informed decisions. See you in the next video. Bye bye.